discuss that and a lot more. We are now joined by Karthik Shankaran, who's the Director of Global Strategy at the Eurasia Group, to share his insights on the Brexit conundrum, including the impact on Britain, EU, and the other partners. Thank you very much for joining us here on The Big Picture. We've seen this unprecedented, this precipitous decline in the value of the pound, and clearly that reflects, the sentiments and the confidence level that investors have with the British economy. Is there any relief that you foresee for UK in the coming years?
It depends on which asset you look at. I mean, I think the pound has taken the brunt of the pressure, and that makes sense. Our view is that exit from the EU is essentially going to make the UK permanently poorer, and that's for a few different reasons. One is that you'll probably have, there's going to be a lot of uncertainty about the nature of the trade relationship with the EU. It will take a long time to negotiate this, which is going to add to uncertainty. But there's another factor which is which is more permanent. Eventually, that trade relationship in the goods markets may get sorted out. But the real problem is in financial services, which is a huge portion of the British economy and of British exports in particular. The problem here is that once Britain leaves the EU, it will lose the protection it has by being an EU member against attempts by the European Central Bank and others to repatriate business from from Britain to the continent, particularly euro-denominated businesses. We think what's going to end up happening is that as that business gets repatriated to other places like Frankfurt, Paris, Dublin, what you'll end up with is a financial sector in the UK that's much smaller, which then probably has knock-on impact both on services that cater to that financial sector, as well as on things like real estate values in Southeast London, both commercial and residential.
Are you suggesting then, Karthik, that perhaps London could lose its centrality, its preeminence as the financial center of the world?
I think that's a very, very real prospect. And the reason is, London has advantages by virtue of its time zone, obviously. But it's also been the center of two big things. One is the euro-dollar market, and the second, which is to say the dollar trading over outside the boundaries of the United States that goes back to the 1960s. But also, it's the largest center for euro-denominated trading, and the ECB wants that euro-denominated trading in euro-denominated derivatives and things like that to come back to the continent. And I think that's a good case that they will be able to do that, citing their prudential authority over this. It's also worth remembering that you have many large global financial institutions are based on the European continent. France has 4 big global banks. Germany has 2. I think they'll all be susceptible to some degree of pressure. And the third thing is that the Brexit itself raises a lot of questions about the UK economy. And there are 2 things that are critical here, I think. One is you have a country with a very large current account deficit, 7% of GDP. And the second is you also have a country that has a very large financial sector as a percentage of GDP, 4.5 times GDP in terms of bank assets that are primarily funded in wholesale, about half of which are funded in wholesale markets. So you get a lot of these questions about, in the event that Britain leaves the EU and goes into this kind of journey into the unknown, does it need to downsize its financial sector? I think all those factors will play a part.
Right. In fact, we had Martin Sorrell on our channel just a few moments ago, and he said that uncertainty is the biggest enemy of growth. Now the UK has decided, at least 51.9% of UK has decided that they want to sever ties with the EU. Now, of course, the divorce proceedings will begin, and already you can see differences of opinion coming in. So on one hand, today the British Prime Minister David Cameron said that that the process of severing ties with the EU will be done in a gradual manner. But you have Germany, in the German chancellor saying that they want the process to start immediately. So in that sense, will there be perhaps a temptation on the part of the Germans and the French to actually, sort of make an example out of the EU to deter some of the other countries from also breaking away from the EU in the future?
I think there's going to be some of that motivation, certainly, but it depends on which parties you look at. I mean, the French are much more inclined to be hostile in this respect than Germany is. That said, our call is that Britain is not going to have forever to delay invoking Article 50. They may get through the end of this year at the most. I mean, they recognize that there's going to be a new prime minister, which kind of takes you through. Which takes you through October, perhaps a little bit after that. But there are, a number of political considerations here. France and Germany both have elections next year, and neither of them wants to go into an election with this question left open. The second point is that, exactly as you said, there is going to be a very strong desire to make sure that other people aren't tempted to follow in Britain's path. The third thing I would point out, and this regards bargaining strategy, is threatening to delay invoking Article 50. I mean, some people in Britain in the Leave camp seem to think it's a trump card, but could it actually backfire? Because no one is actually going to invest in Britain without any certainty about whether Article 50 is going to be invoked, when it will be invoked, what future trade relationships are going to look like, what the future boundaries of the United Kingdom are going to look like. So in a sense, I would argue that threatening to hold on to Article 50 as a card that we can play because it's going to hurt the Europeans more, I would ask, I'm wondering whether in the Greek case, it's the gun that's actually pointing in the wrong direction.
Right, absolutely. Well, Kartik Shankaran, thank you very much for joining us here on The Big Picture and taking us through your quick take on this. Remember, European Commission will be meeting tomorrow, and clearly Article 50, whether it will be invoked or not, a lot of that will be discussed. The issue really is that there is simply no precedent, and many are saying that the very provision under Article 50 is also written in a very vague way, because nobody thought that any country would want to sever ties from the EU.